Hello, all you lovely people out there. How are you all doing? I'm Kate Hill, and I am here to give you the best commentary about our property markets. Tina Howes is with me from SmartMove, one of Australia's leading and award-winning mortgage brokers. We are giving you a whole series explaining all things property finance, so stay tuned. Hello everyone, I'm back with Tina Howes from SmartMove, one of Australia's leading and most award-winning mortgage broking firms. And Tina and I are here to talk to you about all things property finance. So this week, we thought we'd talk a little bit about what has happened when what happens, I should say, when your loan has actually settled. You have spent years, or it seems decades, saving diligently to buy that property. You've got a sense of achievement, you pinch yourself, you're breathing a massive sigh of relief even. You never thought you'd get there after so long going to open homes and increasing property prices. And finally, your loan has actually settled. You've bought the property, your loan has settled. You've popped the champagne, you've moved in. Now what? It can feel a little bit weird going from having such a big savings balance to having such a small savings balance. Maybe even a little bit scary. You might start to feel a bit vulnerable because you've got a lot less cash left. You might want to relax a little bit after sacrificing and saving for so long, but then you've also got endless purchases to make for your new home, if it is indeed a home. It might be an investment property, of course. But at some point, it is good to get back to using that same self-discipline that you had to get there to achieve you buying that property in the first place by saving the deposit or paying your loan off and getting equity out. So Tina has some handy hints and tips and pointers for us to get you back on track post-settlement. Right, Tina?
Yes, Kate. Thank you. Well summarized.
Thank you.
It's something I hear regularly, like the initial feeling of relief. Yay, we've done it.
Yeah.
It's almost a bit like getting married and then going, what did we do with our weekends before?
Yeah.
When you don't have to go to open houses every weekend.
That's right.
Yeah. So
Yes.
my first thing that I would strongly suggest, and you would have had to do this, particularly in the last, say, 5 years, if you've obtained a home loan or an investment loan, is you would have had to have done a budget. And look, the budget would have been a forecast, but the reality is now you've actually found that property. Give yourself a few months of, working out what that new life looks like, where your local coffee place is, what your local takeaway looks like, what your commute to the office looks like, and redo that budget. Reassess what your actual electricity bill looks like now, what your rates are, strata, if that's involved. Really just sort of have a really good grasp on what that now looks like. And when you redo that budget, you'll be in a position to sort of have a look and say, actually, you know what, there is that surplus. We do have this money to make extra repayments, put aside money. And we did a whole podcast on that previously. So have a listen to that one with some tips on how to get ahead on your loan. Now, if you've moved into a new place, chances are there will be some purchases to make. Write a list on that. Set a budget of what you actually need to purchase and stick to it. Because let's face it, without a goal and without some restraint, you can go crazy just buying absolutely everything needed. Whether it could be new carpet, it could be new curtains, new paint, everything. But have a kind of clear goal set of what is actually required for that property. Get some quotes and work out how you're going to fund those and over what period of time.
Yeah. Can I interject really quickly? And I'd also say you give yourself a little bit of time to settle in before you go rushing off and keeping IKEA single-handedly in business for the next 12 months.
Absolutely.
See what you actually need, see what the property needs. And if it's an investment property that you've bought, You might get a long list of, wishes that you get from a tenant. If you've got a tenant or a tenant moves in and they, make all these, you've got a list as long as your arm as to their demands.
Right.
You don't have to do everything immediately, right? Especially when it comes to investment property, because obviously you're trying to keep your expenditure as low as possible. You do want to maintain the property well. It needs to be in good condition. It needs to be waterproofed. Any damage needs to be fixed, but you don't need to go installing air conditioners in every room, right? It's very much a wait and see, let the dust settle, see what actually needs to be fixed before you start spending money. There you go. Sorry, had to.
No, absolutely. Yeah. And it's the same as don't go out and buy a new couch before you've even moved in.
Yeah.
Use your old couch and work out what layout you need.
Yes. Yeah.
Which position works best? Where's the sunlight coming in? All of those sorts of things.
Yeah.
Give yourself time, as exciting as it might be.
Yes.
Particularly if it's your first home.
Yes. And then what you'll probably find is that the old couch is perfectly good enough, and you can put that spare money into your loan repayments that you didn't spend on the new couch.
Exactly. And for those that haven't listened to our other podcast on get ahead on your loan, but I'm a big fan of making use of multiple offset accounts and using those accounts now. This is a big one that you've settled on your loan, you've got a new bank account set up, but if you're with a bank, chances are it will be a bank that lets you have 5 accounts, 10 accounts without charging you extra. And then when you've redone that budget, utilize those different accounts for different purposes. So, it might be you might have a rental account for that investment property. That might be the account that you pay all your outgoings and expenses from. You might have a salary account. You might have a holiday account, a bills account, a luxury spending money account, an account for extra repayments. Whatever it is, really strongly suggest that you get ahead of your finances by having a clear grasp of where your money comes in and where it goes, whether that's monthly, weekly. So redo that initial budget so that you can help get to the next goal, whatever that may be. And that takes me to my next point, which is basically set a new goal. You got here, and you got here so well because you had a goal in mind. You didn't want to rent anymore. You were sick of being told to move out. And every time you had to move, you had to worry about schools for the children, whatever the case may be, removalist costs. You're now in this new home, new apartment, or you've purchased this new investment property. But those goals is what helps you to make those sacrifices and decide extra money. So set a new one, whatever that goal may be.
Absolutely. And I think, when it comes to the investment property, that could even be I guess it will depend on whether you own where you live as well as to which loans you're paying down first. See previous conversations. But if you are paying down investment debt, if it is right for you to start paying down investment debt, again, and I'm always saying this, monetize it. Look at how much extra cash you're going to start being able to either pay back into the loan, the money that the property is going to be earning you by you starting to pay those loans down, because you've done a budget, you've got a surplus, and you're starting to pay those loans down. I promise you, it is the biggest motivator out there. I speak from personal experience.
Absolutely. And the dust has settled, you've settled on your loan. It's not too soon to just reach out to your bank or your broker and say, look, I know it's really, really early, but what do we need to do to buy an investment property or buy that second investment property? We'll catch up on this topic shortly, but it's really good to know what's needed for yourselves to be in that position to get to that step. It can't hurt to see a financial advisor, get your insurances reviewed. If you've had no debt before and then now all of a sudden you do have a big chunk of debt, great time to make sure you have adequate life insurance and income protection. All of those things that you don't often think about until you've actually made that step in life. Review your superannuation. Go and see an expert in regards to that.
Yes, very much so. So that's awesome, Tina. Thank you. I think, again, our takeaways are redo your budget. That's key.
Yeah.
Isn't it? You're going to hear me. You're all going to hear me say this 1,000 times over the coming months, but there is nothing in life that can't be solved with a good spreadsheet.
Absolutely. Maybe that's why we get along so well.
That's right. So, you know, you are tracking your expenditure. You know, let the dust settle, but do make a new spreadsheet. Look at what your expenditure is. Look at what you need in that property. Let the dust settle. Look at what you actually need. It's going to keep coming down to that. We all want new furniture and we all want new clothes, but do you actually need it? We don't want you to live like paupers, but those sacrifices, they can change your life. Literally, they can change your life because you're paying down investment debt or home owner occupier debt a lot quicker than before. So
yeah, absolutely.
Right. Yes. Wonderful. Thank you so much, Tina. Wonderful words of wisdom as always. And we will see you all again very soon with more property finance talk. Woohoo.
Thanks, Kate.
Bye.
Bye.
I really hope that you found all of that useful. Tina is a mind of information. She and I will bring you lots more videos explaining all things property finance. Don't forget to leave us a comment and a question. And don't forget to hit the subscribe button and also just give us a little like on the video if you are enjoying the free content. And we will see you really soon. Bye.